Welcome to Inspiration Inc. A very happy new year to all our viewers. We have a very special guest as first episode of 2019. We have Mr. Ashish Chauhan, MD and CEO of world's fastest stock exchange BSE. Sir, thank you so much for joining us. Wish you a very happy new year and wish you great success in 2019 as well. But as the name goes, the show is called Inspiration Inc. So I'm going to ask you all questions about your beginning and then we'll follow about your journey. So you are considered, in a very subtle way, you are considered as father of derivatives, modern derivatives market in India. So when you started this journey, did you think that Indian markets will grow to this extent, or the derivatives market will be so modern? And also about your own journey, when you started, did you think that this is where you will reach?
When we started equities market on NSE, within 11 months, that market became larger than the largest market in those days in India called BSE. And so again, I was running that market. I set it up, all the screens, all the processes, procedures, regulations, and so it gave me a grounding in the markets, functioning of markets, regulating markets, operating markets, creating newer markets, market microstructure, and so on and so forth. And that's what basically gave that confidence at a very young age of I think 25. And then after 11 months, you already become larger, and
right.
And so we started saying how to do more reforms. So we started working on two projects. One was the depository setting up, and so it required a lot of regulations. A new law was enacted called Indian Depositories Act, and then for derivatives also there were a lot of changes in Securities Contract Regulation Act and other things required. And so we ended up writing down what all were the prerequisites for setting up derivatives, and we ended up kind of cleaning up all of them one by one, like having a good index or having a software which can trade derivatives, and regulations changing in all this SCRA, as we call it, Securities Contract Regulations Act, Securities Contract Regulation rules, and like 50 such items. And we ended up sort of doing one after another. Of course, there was no understanding of derivatives, and those days were quite difficult days for derivatives also, because Nick Leeson, which was a trader in Singapore, ended up blowing up the entire Barings Bank due to derivatives trading. And so there was a fear, there was a worry also in the market that only PhDs in mathematics can trade in derivatives, and Indians, normal Indians, will not be able to understand. And so I had to do a lot of marketing and sales. Of course, I'd done that for setting up screen-based trading and doing it across India to popularize it, getting more members and all. But derivatives marketing was different. So I started teaching derivatives to young students at SV Jain in Somaya both. I used to run full course on derivatives, which in a sense nobody wanted to teach, nobody was even aware. I also learned derivatives hard way, like the way I learned satellite telecom or sort of software programming and so on and so forth. So there was a practice of learning by first principles, by looking at books, by talking to people, by experimenting, and that helped me set up derivatives. And those days, of course, we had a interesting product called Badla, which is known in the world market as Contango. Although there is a perception that Badla was a uniquely Indian product, it was as much Indian as Indian stock market is, because it's again pretty much
an Indianized version, basically.
Right, and it is pretty much the same as Contango in the world markets. It is there from 1620s in various other exchanges. But people were using it to carry forward their positions.
But I was about to ask you that how difficult it was to convince people to move away from Badla, because even now, if you hear voices of some of the traditional big bulls in India, they would still say that Badla was better for India and we should have never followed the derivatives route.
Badla was banned because of certain reasons early on. Then it came back in a different practice where NSE merged their ALBM framework with the that is the borrowing lending platform with the equities market, and even BSE did it with their borrowing lending platform called Bless with their underlying market. It became another type of Badla very quietly, and nobody realized, but it was going on, and we were kind of cleaning up the minimum prerequisites. So if you don't have good prerequisites cleaned up, available, then what happens is you may start and you may fail. Whereas here, it took us almost, I started working on it from 95 onwards. My first letter to SEBI, that time Executive Director and whole-time member Mr. O.P. Gehrotra was there. So my first letter to him from NSE that we want to set up derivatives market was somewhere, I think, in December 95. And so it took us 5-6 years to sort of go through all the grind that is required. A separate committee was set up called L.C. Gupta Committee to discuss, debate whether India can have a derivatives market, whether India should have a derivatives market. If it is true, then what kind of regulations it should have. And so that committee took a long time, almost 18 months to deliver its report. And so we had to go through that very painstakingly, give all the answers the committee was raising, media was raising, and so on and so forth. So it was like you were waiting very patiently, working very hard, with the hope that somewhere this modern framework will be allowed. And in the meantime, we were also marketing. I would have spoken on derivatives almost over 5 years till 2000, almost 500 times in different parts of India. And nobody had heard of derivatives except that it's a bad thing. And so, and we would go and talk to common people. And talk to them about how derivatives work and how in day-to-day life you can use it. For example, when you take an insurance, you're actually using a derivative of sorts. And so we had to explain to them in a more interesting, more day-to-day basis. And so people were becoming comfortable in 4 or 5 years. We had created an army of people who were specialists. So we also set up a certification in financial market framework, NSE certification in financial markets. And in some ways, when you look back in retrospect, we should have actually gone for delivery based and so on and so forth, which is true with the rest of the world also. It's not that we were the only one.
That debate is still open now. So.
Yes, and now I think SEBI has now sort of announced their intentions to do it completely delivery based in 2019. So it remains to be seen how it plays out and how people accept it. But overall, the derivatives became the mainstay. What derivatives do is provide you what we call hedging framework, but they also provide you leverage.
But then when you moved from NSE, when you moved to Reliance, and you obviously were the CIO with Reliance Industries, then you were also the CEO for Mumbai Indians. So, I mean, how was that transition? Because after being in the thick of creating the modern financial market, as far as equity is concerned, you switched to something which is totally different. So how was that transition?
It basically, again, I mean, I tell myself and of course in many of my talks that if I were to be born in a rich family, I wouldn't have got the experiences I've got. So because I had to work hard to actually survive. So around 1999, the IT market started booming, and there was this Y2K framework where a lot of Indians were getting jobs abroad and so on and so forth. And so I also had some opportunity to go abroad, and I thought I will go abroad. But when I went for interview to Washington DC, I got a call saying that if you want to start on your own, if you want to start on your own, we will fund you for B2B e-commerce market. And that was an interesting proposition. I am not from a business family. My family, both parents were in government of Gujarat service, so we had no exposure to business except that I did MBA, and of course I knew a lot of business, especially stockbrokers, because I was part of running of NSE. But effectively I had not taken financial risk as a businessman before, but here was a good opportunity, and I thought at
why not
30, 31, if you don't try, probably you will never try. And so I ended up starting my own firm called exchangenext.com. But in 2001, the e-commerce early boom went down, and I was told that no additional funding will be available. So in 2000, I was on top of the world, being one of the top employees of NSE. up there in a very successful environment. In 2001, now you are on road with pretty much 100 people's responsibility and almost no hope of a new job.
Correct.
But then the Reliance who had funded those days, exchangenext.com, said that we can take your team and that team can work in the Infocom, Reliance Infocom, that was their earlier
venture, right?
Telecom venture, because you guys are good at IT and also you know telecom. The Reliance team, which was managing Reliance, started thinking that I'm very good at IT. And I was trying to run away from IT all my life after setting up NSE's IT early on. I became the head of business for NSE. And of course, I wanted to become a businessman in setting up exchangenext.com. But effectively, IT was not leaving me.
Correct.
And I wanted to be in business. But again, there was no other job which was possible. So I ended up becoming the CIO of Reliance Infocom. And then later on, there was a split in the family which ran Reliance, and so I went into the industry side, which was more into petrochemicals and refining in oil and gas, and so I had to learn the technology for those businesses from ground up. I also set up the retail, Reliance retail related IT framework from ground up. In between, I also ended up being the head of public relations for Reliance Group for 3-4 years. And then when the cricket team was bought, I was made the CEO of the cricket team as an additional job. So I was like wearing many caps at the same time. This main job was to head the IT group for the entire group, but also additional job of PR for the Reliance Group, even IPO like Reliance Petroleum IPO, and then the cricket team, Mumbai Indians.
Right.
These were kind of fun part of the job, and it was interesting to be there, learn things, and create businesses from scratch.
One observation I have about your journey is that you end up doing things where you break away from tradition, and I think that's what you did when you started, when you joined BSE, because it was oldest exchange in Asia. It had a lot of baggage in terms of the way they used to operate or the way they used to conduct their business, and obviously NSE had become a monster. So how was it being on the other side? You set up NSE, then you go to Reliance, then you join BSE, which is actually rival to NSE, and then you changed things here and turned it into the fastest exchange today in the world.
Everything I look at it is basically a problem to be solved, and also if you work hard with intelligence, grit, and apply your brain on a continual basis. It's not one-time brain application, it's a real life, everyday sincerity that counts a lot, and you have to be really flexible in your approaches and mindset and so on and so forth. And that is what I see. Whatever my life has been, not about ambition, not about doing anything where you plan and do execution. It's just that sometimes opportunities come your way which other people don't want to take, or you are the first person they see and they kind of think of you, but you develop that reputation of sincerity, of hard work, of solving issues, becoming kind of troubleshooter and so on and so forth. BSE had serious issues. There was a new competition coming up, very aggressive.
Correct.
NSE itself was very formidable by then, and BSE had become very small in terms of its overall footprint.
Market share, correct.
And also there were other structural issues like employees were unionized, officers were association oriented, where performance was not an issue. We had become only a stock exchange, while as NSE had become derivatives of different types. Even stock was there, but very little
various other products,
sort of business was coming out of that. And so we had to think through what were the issues plaguing BSE. And one of the issues was, of course, people, which is, service business, that's the most important part, that you need very qualified, up to the mark people who know the derivatives and products and so on and so forth, the regulations in a modern way. Similarly, we had to work on products to expand our portfolio. We had to also expand our network because we are primarily Bombay centric.
Right.
So we had to invite people from outside. We had to work on technology because technology, of course, BSE technology is not bad in '95 when they automated, but by the time it was 2010, it had not been sort of up to date. So we had to work on every part of technology, from trading, clearing, settlement network, broker management, listing management, all sorts of things. And so that was like those were 4 what I call pieces which you had to work on. But the 5th piece, which was most important, is the regulatory reputation. Because of various scandals over 120, 130 years, BSE's reputation had kind of become very bad.
Correct.
And if you don't have a reputation in our business, which is basically a trust business, then everything else you may do very well.
It doesn't work.
The 5th part is absolutely important. So we started working on building reputation. But how do you build that, right? It's not easy to build back reputation. In fact, it's easy to build reputation up front, but when it goes down, to bring it up is very tough. And I'm happy to say that over last 9.5 years I have been at BSE. The biggest benefit that we have got is to have a very squeaky clean reputation. And of course, over that period, we have started being counted as the fastest exchange. But more importantly, in some businesses, we have won huge market share, which nobody actually thought we will be able to do, like in currencies derivatives, interest rate derivatives, in mutual funds. We created a completely new framework for India that it has automated the entire mutual fund distribution, where now we are, last year we collected almost 1.8 lakh crore rupees for mutual funds in India. We are now pretty much 20-25% of all the funds collected by mutual fund industry. And almost 40% of all new investors are coming through our BSE Star MF platform. Effectively, we are now thinking that BSE has to evolve from a very small stock exchange or stock related exchange to a much larger e-commerce platform. Our bonds platform basically raises somewhere between 2 lakh crore to 4 lakh crore for Indian corporates every year. Now, government bonds get sold, sovereign gold bonds get sold on that platform. So, effectively, we are reimagining the ways an exchange is perceived or exchange works from a very narrow stock sort of equity punting or equity speculation to now what a nation building requires, raising of funds. So we have now a startup segment for youngsters to come and raise funds. We have an SME segment which is 280 companies listed. We have raised for small little entrepreneurs 2,700 crore, but more importantly their market cap is close to now 20,000 crore. We have an incubator in BSE which is funded up to 200 companies over last 3-4 years. So we are trying to basically work in partnership with the nation, that if nation wants to raise its income, to create wealth, then BSE will be the first choice, which it has been over 143 years now.
In India, it is believed that the future of India is very bright. When it comes to individual future, that is where the worries or the concerns start for an individual. So what is your message to the youth who is watching this show?
The technology is the only change that happens in the world. And the societies surrounding it. India missed out a great technological revolution called Industrial Revolution. From say 1650 to 1950. When Britishers came to India in that period, 1650, India used to account for almost 25% of world's GDP. When Britishers left in 1950, pretty much plus minus 3 years, we were 2% of world GDP. Of course, we were subjugated, but we also missed out on the great technological revolution. Over the last 70 years, we worked hard, and we became from 2% of the world GDP now around 3-3.5% of world GDP. It is 50% jump or more. But how do we become 25% of world GDP? Today, there is a framework of the technological change that is happening. One single information technology changed the world over the last 30-40 years and also changed India completely. In 50 years time, even if we create 20% of the world's new wealth, there will still be $72 trillion. It is currently India's total wealth is somewhere around 8 to 10 trillion dollars.
Right.
We will create almost 10 times more wealth in next 40 years. We might grow at 30-40% sometimes on many years going forward. It is not impossible. It is, we have to believe, and the uncertainty is going to be immense because the older technologies, older industries will die,
yeah.
the newer industries will come up, and we need to ensure that some of us continue to experiment, continue to create newer wealth, and the entire society will benefit the way it is done in this information technologies early part of the revolution, where Infosys or Wipro or TCS or Patni Computers, and so many of them have come in the beginning,
right.
and then later on many more have taken the baton and run with it, and the entire society has benefited.
Right.
For me, that next 50 years, India has a golden chance to become rich as a society before it becomes old.
Correct.
Today, I call the next 50 years as time for capitalism without capital. You require little capital, you require a lot of brains. Earlier, you required a lot of capital, little brains.
Little brains.
Now, and Indians have brains in tons.
Correct.
Right? Plenty. And that's why Indians should create businesses, come to BSE, raise that little fund they require, and then when that wealth is created, is shared with your nation. Right. Otherwise, today, foreign private equity people, foreign angel investors are investing in Indian brains.
Correct.
When that wealth is created using Indian brains, that will be shared with outsiders. It's not, I'm not saying that you shouldn't do that, if at least they are investing money. But Indians also, rich Indians specifically, should also learn to invest in newer businesses where little capital is required.
Correct.
But the wealth creation could be immense.
Correct. I think that's the best answer to start 2019 with. Thank you so much for joining us. Thank you, sir. Thanks.